21-year-old Amanda Harlow of Carmichael worked part-time while going to American River College. But in March of last year, at the start of the pandemic, she was laid off.
She was working in the service industry, working about 25 to 30 hours a week.
She began collecting unemployment benefits, including those extra $600 and $300 a week payments that many have received. While unemployment isn't taxed in California, it is taxed at the federal level.
So she volunteered and elected to have federal income tax taken out of her unemployment benefits.
And while that covered regular unemployment benefits, what Amanda and so many others didn't know is it did not account for the pandemic funds. In a statement, the Employment Development Department told us, quote, "This withholding option was not available for the $600 pandemic additional compensation payments, which needed to be quickly implemented at the time to get benefit funding to eligible claimants in need of them."
And the CPA called and told her that she would be owing $1,000.
Fast forward to the passage of the American Rescue Plan. In it, $10,200 in unemployment benefits will not be taxed.
Which is just common sense. I mean, if your neighbor comes and asks you for help, you don't give it to him, and then next day go and ask him for 10 or 20% of that back.
Perry Gillarducci is with Avant Limited, a Sacramento CPA firm. He says if you filed your taxes or still waiting to file them, either way it has put taxpayers in a difficult spot.
Honestly, I expect that there will be a correction made in the IRS's system and that a letter will be sent to the taxpayer informing them of their overpayment.
Bottom line, the IRS says for those who have already filed, do not file an amended return until the IRS issues additional guidance. For those who haven't filed, the IRS will provide a worksheet for paper filers and work with the software industry to update current software.